A little trading tip of the week. We all focus on when to take a loss, or hopefully we do. You should have that discipline of knowing when to take losses. This is about when taking profits, and that can be more challenging sometimes. But frequently we get out too early, or of course, we get out too late, and sometimes that's a case of, oh, we've seen higher prices. It makes us reluctant to accept a lower price now, and then a lower price, and then a lower price if we're long. And of course, eventually that means you're going to get stopped out. It's a little bit of human nature in there, a little bit of our character, but sometimes it's better to take some profit than no profit. Otherwise, take the decision away from yourself. If you can, put something on like a trailing stop or a hard stop in there somewhere, so that that makes that decision for you. If you leave it soft, i.e. you're making that decision, oh, should I get out now? Should I get out now? Each time the market's moving back nearer to where you got in, hopefully not below, but towards where you got in, it makes it a harder decision for you to get out. And that can quite often lead to you actually getting stopped out in the end. We need the good trades to pay for any bad ones. Okay, so I'm going to be moving on to technical analysis now. And of course, with that, when we look at some of the stock charts, they're all pretty much the same, what we're going to see there. What can I say? Let's have a look at them. First thing I want to do is just remind you of the legends for the charts. So black numbers in the right hand column, they are support resistance levels. Brown numbers are for breakout levels. The claret numbers are sort of the ready claret. I don't know what colour it is really. They're the sort of horizontal, where I've got double or triple tops or bottoms, or where I think that there's going to be support or resistance. When we look at the Dow on a daily, Powell's speech just rocked the market, and not in a good way. And we had that big sell-off, 3% roughly, just on Friday. Big impact, but it's waking investors up to what's around the corner as far as I'm concerned. I'm long put options, and I'm very happy that I've got them, because that gives me the right to be short of the market and higher than where the market is now. So they're sort of in the money at the moment. So obviously things can change. But when you look at that, I've got some support and resistance levels on there. But to me, they're not great levels. But just to get something in there for you. So I've got just over 34,032 as a resistance level. Another resistance level I identified was 33,668. Support levels I've got as 32161, but I've put that in brown because that's pretty much where the market closed, and for me that's a breakout level. And up below that, then it's 30,130. And then so I've got to be honest, I've been a bit bearish of stocks for a while. I just can't, I can see at the moment that companies are managing to, their profit margins are at the highest level they've been since the 1950s. They're getting roughly 15%. Now, obviously that's good for them at the moment, short term for their performance, but longer term, these prices are punishing the consumers. And we are going to fight back. We are going to spend less. We're going to try not to spend. We're going to spend on what we need, not what we want. And that is going to sort of change the purchasing power as it comes through. But it's also going to change the performance of these companies. So Q3 and definitely Q4 are going to be interesting. So when we look at the Dow on the 30-minute, again, I've just put some levels on there. Now this week, last week I didn't really put on the pivot points. I left them off for a week just so that they didn't sort of, not too much confuse you, but just to have too many lines on there. But I put them back on again this week. So as you can see on Friday, the Dow tried to break R1. It popped through, but it couldn't stay there. And then, of course, once Powell started to speak in, as you can see, this is a 30-minute chart. It was just a slippery slope all the way down for the rest of the session. Down, down, down. And I've managed to sort of put on a couple of support levels, and I've got one resistance, which is 32673, and then supports which are really from last month, so they're not really in view there, but 32088 and 31944. Moving on to the S&P. You know, I'm going to see a similar picture with all the US stocks that I'm analysing. So resistance, which is my main resistance for the S&P, which is 4,302 and 3/4. You know, that's that top line I've got in there. You know, we did pop through that a couple of weeks ago, but it wasn't convincing. And you know, as I say, I'm long put options, so obviously I'm pleased to see it lower again now. But that was a major level for me because that goes all the way back to April, May this year. And it's always important to look back on your charts, you know, not just at what's going on in front of you, but the historical data does really sort of provide some strong stuff sometimes. And then my second resistance level is at 4,229. There's a breakout which I've identified at 4,073, which is the brown level. So again, just wait and see where it sort of is opening and where it's sort of following. And support is lower down for me, which is 3,749. So yeah, that's a bit lower. But you know, if this market picks up momentum, then you know some of these levels are going to start to come back into play. Moving on to the 30-minute, again similar to the Dow. You know, we just had that sort of just continuous red candles for Friday afternoon. So I've got a fresh resistance level in there at 4,110 with support just below 4,000 at 3,994, then 3,952 and 3,913. So yeah, but there's there's room on the downside, I would say. You know, I'm not telling you to sell. I'm just, you know, I've got very strong views on most things, but I don't want that to influence you at all. I'm just explaining what I see in the charts and the markets at the moment. You've got to bear in mind, I've got a lot of experience. I'm, you know, 50 years in the industry, and you know, I've been trading prop with my own capital for the last 36 years. So you know, I've seen pretty much everything in my trading career. So okay, so moving on to the Nasdaq. So with the Nasdaq again, we're seeing similar sort of thing. So I've identified those levels, and again, you know, the one going back to April, May is still in there as well, which is around the 4,200 level. Sorry, 13,554s. And then, of course, I've managed to get some other lines in there as well. So for the Nasdaq, I've got 13,346 for the resistance, and then for the support, you know, they are, one of them sort of, again, you know, it depends where it opens, because I record parts of this on Sunday evening when I'm doing my analysis, so, you know, but we don't publish it until Monday morning. And then the supports are below at 12,550 and 12,051. So yeah, quite a way down. But, you know, these markets continue to react to what the central banks are doing. And then when we look at the 30-minute here, then resistance I've got at 12,819 and support at 12,555 and one below that at 12,364. I think that's what it is. Sorry, 12,2. And then moving on to Russell. So with the Russell, again, just remember the Russell are the small and mid-cap companies. So here we have 2023 as resistance and 1868 as support. And then when we move on to the 30-minute, then I've got 1909 as resistance and 1868 remains the support. So stocks are a bit vulnerable at the moment, but you know, it doesn't mean they're going to crash. It just means cautious about holding on to those longs or holding on to them for too long at the moment. But you know, I'm sure you'll get opportunities both ways. Okay, so now we're moving on to currencies. So here's the pound against the dollar, otherwise known as cable. So maybe you know what that means or not. So when we look at the pound, you know, I've been warning you over the last at least 2-3 weeks about this. You know, trying to pick bottoms on the pound against the dollar is a dangerous situation at the moment, and the same for the euro as well. You know, I've tried to warn you of this. And so when we look at that, so on Friday, you know, the dollar strengthened again, and you know, it'd been weakening during the week, to be honest with you, but you just knew that it was just waiting for what Powell had to say. And so I see resistance at 119.70, potential support at 117.09. And then when we move on to the 30-minute, and again, you know, just always just when you're looking through these, look to see where the pivot points are. Look how the markets have reacted to them as well, because sometimes that can give you some good insight. If you don't know how to use pivot points, then reach out. We do courses on all these things. You know, on a one-day workshop, you'll learn that and a lot more about the analysis that I do. So when we look at the 30-minute, I've got resistance now at 118.54. I've got a support at 117.31. But you know, I'm going to be cautious with these support levels. Moving on to the euro against the USD, so managed to get a support and resistance levels in there as well. 1.0292 is resistance, and support at 0.9959. Then moving on to the 30-minute, again you can just see the reaction from when Powell started to speak, how the dollar strengthened there. So there I've got just over a dollar, so $1.0034 now resistance, support at 0.9970. Just be cautious with these support levels. You know, again, look at the pivot points because they will help you with your trading next week. Bitcoin. So Bitcoin actually sort of had a pretty flat week. You know, it was very ranging, really, considering. And it was a narrow range. So resistance I've got at 24,485. There's a one below that at 24,095. Support I've got at 20,780, but that's a break, sort of a breakout one, and it was breaking that over the weekend, so I'm not sure where that's going to finish, because remember I do my analysis on the futures. And of course, if it does break through the 20,000, then my next support after that is around 19,889. Here it is on the 30-minute. So, you know, you can see there we went up and tested R1, and then Powell's speech started, and it just sort of pretty much collapsed from there. And now, so resistance 21,950, and below that 20,570. Sorry, I can't get my numbers right today. And support is 20,270. But again, you know, as it gets down there, if the stock starts to come off, just remember we've got that inflation going on, and here it is between the stocks and crypto Bitcoin. So, you know, if the stocks keep coming off aggressively this week, just be cautious about buying Bitcoin. But again, you know, Right, couple of commodities. So here we look at gold. Gold was having a nice sort of recovery from the start of the week, and then Friday just sort of destroyed that. But it didn't really collapse. All it did was just put it back to where it started, or almost started the week, really. And so for resistance levels, I've got a one above the market, which is 1834. A nearer one, which is 1783, support at 1725, and then further support at 1668. And then on 30-minute, I've got resistance at 1766, as you can see there, support at 1746. Again, sort of that was quite nice. Sort of rejected the pivot level on Friday earlier in the day, and then the market came off. It looked as though it was going to go back up and retest that just before Powell started his speech, but then, as I say, Powell's speech turned that on its head, and investors sold gold as well. Just remember, gold quite often is a risk-off trade. So at the moment, yeah, it's not really reacting as it should to what's going on with inflation, with central banks, and with risk in general. But it does from time to time. So it's more of a loose relationship at the moment. So we're seeing that coming off. Sometimes, investors need to sell their sort of gold to finance some of their other purchases or some of their other positions they're already holding. Doesn't necessarily all these, most correlations, the majority of correlations are there, but traders, institutions make them or lock them into a degree, but they can break from time to time. So never believe that these hold indefinitely. There are a few that do, sort of bonds, price yields and price things like that, short-term interest rates, the rates versus the futures prices, they sort of pretty much set in stone the way they're calculated. Okay, so moving on to WTI and oil. So again, oil sort of again mixed impactors for that at the moment. On one side, people need energy, so there's demand for oil. On the other side, Iran's still going through discussions with the US. Possibly they will be allowed to export again, which will bring more oil onto the market. If that does happen, then I would expect that OPEC Plus will actually cut production to compensate for that. And of course, when you look at power prices in general, the oil equivalent of what electricity and power prices are at the moment would put oil at $1,000 a barrel. But obviously, it's nowhere near that. But it just sort of demonstrates the pressure that there is on the energy markets at the moment. So oil, I've got a couple of sell levels, resistance levels rather than sell levels, but that's got to be your choice, which is 96.56, and below that is 95.52. Support is down at 87.24. On the 30-minute chart, I've got resistance at 95.73 and 94.03, with support at 92.25. And again on Friday, it did pop down, but then that that S1, that support level held in quite well on Friday, and then it sort of moved up from there. But sort of, yeah, dollar impacts oil, but at the moment you've got to look really deeper into the fundamentals of oil rather than other situations such as just a dollar. You've got to take a lot into account. There's a lot of impactors for oil. So anyway, I hope you've enjoyed this week or this week, and next week I hope you have a great week. Before you go though, I would really just sort of like to highlight our other services to you. Now our daily newsletter, which includes global news, but it also gives you fresh daily chart levels and fresh pivot point levels each day. It's free to start with. You know, you can have a free trial for at least a couple of months. So why not sign up for it and see if it adds value to you? It's giving you daily insight to what's going on around the world. You know, it gives you more time to focus on the markets. You don't have to go. And plus, I filter that news. So what I put into that, as far as I'm concerned, is relevant to the markets. And then we do one-day workshops that can really help you to improve in any particular area, or even just to get you going in trading. I do a great one, which is trading for beginners. And then courses, we do a 1 week course which can really sort of establish your understanding, mornings of theory, afternoons of practice. But you know, I can take you from zero to hero in a week. Is that going to make you a trader? No, but you will understand a lot about the market in that 1 week. It is an intensive course. And of course, if you're really serious about a trading career, and turning that into revenue, then we offer master classes, which are our flagship ones, much longer, 4 weeks of guided learning, but you don't have to take them all at once. You can take them intermittently as it works for you. All live courses, all online. And then on top of that, there's trader mentoring, just in case, you know, maybe you want an hour, 2 hour of my time, or a half day or a day, just to help straighten out certain areas of your trading. Always happy to help and do that. And then consulting, you know, we consult to companies, we consult to exchanges, we consult to brokers, we provide educational content to them as well. And lots more. You know, if it's to do with trading, we're all over it. Contact us, info@symaxfintech.com. Any questions you may have, or anything you want to sort of put to us, you know, we're always happy to hear from you. And if you want to ask me any questions directly around trading, then chris.tubby@symax-int.com. So thanks very much for watching and listening, and have a wonderful week. Sort of, you know, the build-up's going to be towards NFP on Friday. But again, you know, when it comes to NFP, don't just focus on that number. Think about the earnings. Think about the jobs available and the amount of unemployed ratio as well. But earnings, because earnings is inflationary. So anyway, have a great week, and look forward to seeing you next week.